Hello, I'm Natasha Chilingarian.
And I'm Michael Ogden. This is Shared Accounts with CU Times. During this time of year, for many people like me, it feels like the end of the world, the end of times, the apocalypse. Some would say itchy eyes, runny nose, windshield covered in pollen. It's allergy season on the pod. Ugh. Grab your tissues and Claritin and shut the windows. Also, welcome to Shared Accounts with CU Times. Coming up, we'll be talking with Jeff Harper, who is Chief Lending Officer at Orange County's Credit Union, about the one thing no American can live without, aside from their smartphones. Although nowadays, this one thing is often located inside our smartphones. It's their credit card. So log on to your favorite shopping website, get ready to make some really crazy impulsive buys. Plus, Jeff gets us all dreaming about a sunny vacation to iconic California county where his credit union is located. Stay tuned for that. First up, we have to take a quick break from this crazy week. Check in with
Oh,
Natasha. And
hey, Em.
you pre-sighed.
Yeah, well, when you said take a breather, I did
Yeah.
just that.
Oh, well, good. Do you have allergies?
A little bit. It's not bad. It's definitely nothing compared to you, and I feel so bad for you. You have talked so many times about how bad your
I
allergies
know,
are.
and
I mean, I get just kind of the general runny eyes and
mhm.
sniffles, especially when I return back home to Oregon. It definitely kicks in.
Sure. Here are the two places legit I don't have allergies:
Where?
a parking garage and by the ocean. That's about it.
Okay, well, we just need to build you a parking garage on
There's
the
no
beach.
trees or grass or any living thing in the parking garage.
Yeah.
Anyway, I wanted to ask, what'd you watch this week?
Yeah, so I got into one new show this week that has
Oh,
been really good on Hulu. It's called Under the Bridge.
okay.
You've heard of it. It's been advertised, I think. Well, I've been seeing it probably because it's targeted at me because it's another disturbing murder story, you
Of
know?
course it is.
It's really good. I was drawn to it because one of the stars of it is,
Hmm.
oh gosh, now I'm blanking on her name, Lily Gladstone.
Oh, yeah, I love
Was
her.
nominated. She was in Killers of the Flower Moon
Yep.
with Leonardo DiCaprio. She's
Mhm.
kind of a breakout star.
Oh,
So,
wow.
anyway, she stars in it, very good in it. It's about a murder of a teenage girl in Victoria, British Columbia, Canada. Yeah, I'm really enjoying it so far.
It does check all your boxes for a TV show.
Apparently so, apparently so. Apparently the darker, the more
Uh-huh.
relaxing. I don't know what
Oh,
this says.
I love that.
Anyway, so yes, I've been watching that.
Okay, cool.
What about you? Have you watched anything new, or have you been doing anything in your free time fun that you wanted to bring up?
No, I did get around to watching a movie. It's been out a long time. Her,
Mm,
Spike Jonze movie. It was with Joaquin Phoenix and Scarlett Johansson. She's the voice of the AI in the smartphone.
okay, sure.
Her came out in like 2012 or 13. It was really good. I actually enjoyed it a lot more than I thought I would.
Oh, good.
Amy Adams surprisingly was in it, and she was really great. Anyway,
Okay, cool.
Her.
Yeah,
I finally watched it. I enjoyed it.
very cool, very cool. Well, that's a good topic too, the whole AI.
Hmm.
Real quick, I'll just mention, I'm reading a book right now called Annie Bot. It's a new book, and it's
Okay.
basically about an AI life-size girlfriend that this guy
Okay.
purchases.
All right.
And I'm just thinking, I really hope we don't get to that ever in reality.
I thought we were already there, but maybe we're not.
Not the doll part, but the
Yeah,
I
yeah.
don't know. Anyway. Okay, well, let's go ahead and switch gears there. Speaking of
Let's.
technology, let's talk about a different sort of a technology here. Credit union credit cards is what we're
Okay.
gonna be talking about. I think this is an interesting topic because it's
Hmm.
really not a credit union's bread and butter product, a credit
Yeah.
card. It's obviously something like an auto loan is really like a core product for a
Hmm.
credit union, and most credit unions have a credit card, but I don't know, when I think about it, it's almost like it's like the side of steamed broccoli at a restaurant, it's on the
Okay.
menu, but I don't know if anyone's actually ordering it. It's just kinda there.
Hmm.
And I would say, for me, like when I opened a new credit card recently, I usually go for one that has like this giant welcome bonus.
Yeah.
Get 40,000 points and
Sure.
that'll cover a week of hotels or
Yeah.
something with like, a lot of airline miles. And then I'll usually hang on to a credit card because it offers a benefit that I know I'll use a lot. So
Yeah.
like I use an Alaska Airlines credit card, and it's through a B of A. Don't
Mhm.
tell anyone.
Yeah, yeah.
Because I take a lot of flights on Alaska throughout the year, so
Yep.
it helps me actually get quite a few free flights just with the miles and,
Mhm.
that all rack up there.
Yeah.
And so I guess I'm not the ideal person to market a credit card from a credit union to, but I'm
Mhm.
sure there are, obviously there's other benefits to credit union credit cards, and we talked about that with our guest today.
Yep.
But Michael, I'm just curious from your end, what do you look for in a personal credit card?
I am pretty loyal to this American Express card I've had legit since, like, 2006, I think,
Oh, wow.
or 5. And it's a Delta, it's tied to Delta. So, like you, it's for the travel perks. Not
Right.
that I travel since the pandemic, so it might be a little silly to still have this card. Yeah, I'm just probably stupidly loyal to it.
Okay.
Now
There's
you're
nothing wrong with
making me question my life choices, but
Oh, no.
so I just find comes in handy for certain rebate and travel things, once I get back to traveling. So that's about it for me.
Okay. Well, I'm sure American Express is happy with you.
Yeah. Oh, they're
Didn't
thrilled.
mean to make this into an ad for them, but, um,
No.
anyway. Okay. Well, let's go ahead and get into our interview with Jeff.
Mhm,
Yeah, we had a great conversation with him. He does admit that the credit cards are a smaller portion of their business there at his credit union, but
mhm.
he really talks about what they're doing to grow the program and how they're talking with members to really find out their specific needs. And it sounds like they're doing well with that and they're on a
Yeah,
pretty good growth trajectory.
I
So,
agree.
yeah, it's definitely very interesting.
It is.
So, credit cards, and yeah, we have that coming up next.
Hey, listeners, do you ever ask yourself, hey, self, why is learning so much work? Why can't I just sit back and listen while experts pour important information into my brain? I'm tired. Well, self, I've got some good news for you. Our live State of the Industry Town Hall is coming up on Tuesday, June 11 at 2 p.m. Eastern, and it is exactly what your tired self needs. This live webcast is a panel chat with me and credit union experts sharing their perspectives and knowledge on the tricky world of credit union and fintech partnerships. This live discussion will allow viewers, that would be you, to ask questions in real time and we will respond. Guess what? In real time. I love these state of the industry discussions and the questions we get from you, the audience. To register, just go to cutimes.com/webcasts. Again, this is happening Tuesday, June 11 at 2 p.m. Eastern. Register at cutimes.com/webcasts and join us for a great time.
Okay, credit union credit cards. Let's jump in. Joining us in the virtual studio today is Orange County's Credit Union Chief Lending Officer Jeff Harper. Jeff, welcome to the show.
Hey, Natasha, how are you?
I'm doing well. How are you?
Doing great.
Jeff, so glad you're here with us today. This is fun.
Thank you, Michael.
So, Jeff, just to start things off here, can you share with our audience just a little bit about your professional background and also how you landed in the credit union industry and into Orange County's credit union in particular?
Sure. So, my entry into the credit union movement goes quite a ways back. I was working in odd jobs since I was 14. And when I was 18, my mom came home and told me that one of her girlfriends had a son that got a job at FAA Western Federal Credit Union. So, back in 1980, I went down to FAA Western Federal Credit Union at the time and I applied for a job there and I got hired. By the time I got home, I had a call that I was hired. So that was my entry into the
Wow.
credit union industry. I worked at FAA for 10 years from 1980 to 1990. In 1990, I started working at First City Savings Federal Credit Union at the time, worked there for about 7 years. And then the opportunity at Orange County's Credit Union opened up in 1997. And that's how I ended up at Orange County's Credit Union. It'll be 26 years this June.
26 years. Wow. That is awesome.
Well, good. That at least matches our research because we were taking a look. It's like, oh, you've been there for nearly 3 decades. So, in your head and how you feel, what is it about Orange County's credit union that has made you want to be there for essentially your entire career?
Well, I've definitely made the best and connected well with every credit union that I've been at, leaders investing in me and helping me to grow. What I found at Orange County's credit union was the combination of incredible leaders who gave me a seat at the table.
Hmm.
They were doing incredible things that were exciting. For example, building out a mortgage department, building out indirect auto lending, things like that. And I just found that as I focused on my circle of influence and being the best team partner that I could be, just
Hmm.
opportunity grew as we grew, I grew in my career. And it was just so exciting and it's still exciting today. So I can talk about a lot of things that we've done together in my career here and the evolution that has been very interesting, but it's just always exciting and never ends.
Really nice to hear.
That's what we like in an employer, definitely. They've got their employee engagement is the top of their game, so we always like that. So I know at Orange Counties, you have been focusing on lending, obviously as the chief lending officer now. What about at the first two credit unions that you worked for? Were you also focused on lending there, or how did you kind of get into like the lending area specifically?
In 1980, when I started with FAA, which is Sky One now, at that time, I got hired in the facilities department. And so my first job back then was actually firing up a big tube system. And what would happen is loan officers, when they needed to put a memo on an account, they would call me and ask me for the memo card for that particular member. I would go over to a bin, look up the memo number, pull out the memo card, put it in the tube, and shoot it over to the loan officer. So I felt like my job was so amazing because I got to fire up the tubing system. I got to shoot the tubes over to the loan officers, and then I would put them back.
Yeah.
And that was, my first experience in the corporate world, making sure I got the tubes there and back as fast as I could.
To interrupt for just a second, did you ever throw pens or anything in there?
I did not. I did
Oh,
not. But that kind of evolved into delivering the mail and trying to shorten the time frame there.
yeah.
And then I became a teller. And at the teller window, I was trying to figure out how to move the line faster. So I would open a second window while a member was filling out the paperwork on the first window. That evolved into opportunities in the lending side. I became a loan officer about 3 years in, and that was my entry into the lending side of the business. And back then, it was a much different lending experience in terms of the speed. But I
Yeah.
enjoyed really sitting in front of members and helping them to finance their first cars, finance school and educations and different things. It was just really interesting work for me.
Yeah. Well, and just kind of follow up on that, you must have really seen technology just evolve, just being in the industry for so long from the bare minimum to today. I mean, that must have been wild over the years to see just this rapid evolution of how tech fits in with lending and banking.
When we're kind of laughing at the evolution of technology, I always like to describe a couple of things. The first one is part of my job when I was in the facilities department was printing out memos and interofficing them to the branches. So we didn't have email back then. And so it would take me hours to print all the memos and then drive around and deliver them to the different branches. We got our first PC probably 83 or so, and everybody stood around it and stared at it and tried to figure out what we were going to do with this piece of technology. So
Of
definitely things have
course.
changed quite a bit since then.
Yeah.
Yeah. All right. Well, we don't want to get too sidetracked. I know we could talk about technology for a whole other episode, but let's move on to the topic at hand today, which is credit cards. So, can you tell us when Orange County's credit union first introduced a credit card product program? Or I'm not sure if they already had one in place when you arrived, but can you just talk about sort of how that's evolved over the years at Orange County's specifically as far as its credit card program?
Sure. When I was first hired, we were 3 months away from selling our credit card portfolio.
Oh, wow.
So part of my job was offloading those credit cards to the buyer and
Hmm.
going through that whole process. Over the years, as we kind of grew our talent and got our different skills put together, we entered back into credit cards. So in 2008, I made a recommendation to bring credit cards back in house, and we got that approved and we started to work on that strategy. And right around that time was when the Great Recession happened.
Right.
So
Hmm.
over the years, we just had a credit card program that was serving some members and doing what it was supposed to do. But I think what we really got interested in is in the more recent years, we started to focus on the opportunity that we had in credit cards and just how it can be such a sticky product for members.
Mm.
It can really help to keep members engaged and it can really help a lot of members. One of the things that we were focusing on is what do we need to do to become a top of wallet credit card program?
Mm.
Today, we are about a third of the average peer size that we should have. And so we are focusing on the different deliverables in order to make us a top of wallet brand. We've had double digit growth in credit cards over the last 4 or 5 years. So we've made some great traction on that product. But we have a program that we're launching called Cards 2.0 that we started last year. And
Mhm.
that's really modernizing our credit card program, really getting the member side of engagement put together as well as the security side. So we're really focused in building our credit card program right now.
Jeff, can I ask how does your credit union's credit cards currently stack up against other loan products in terms of popularity among members and performance?
Compared to our current program, I think that we are very basic, but we are working to make it a high end program. And what I mean by that is over the years, we've focused on cultivating. First, we started off with auto lending. How can we have a top performing auto lending program? What does it take to drive organic growth in that area and to have a really great brand and reputation for direct auto lending? And over the years, some of the excitement that kept me here with the opportunities. Back in 2006, I made a recommendation to bring our mortgage operation in house. We were partnering with Acuso at the time.
Mm.
And so
Hmm.
we brought in our mortgage operation. And over the years, we've cultivated quite a reputation with our members for driving fast and efficient mortgage loans. So then in 2003, we were bringing in the business side of things, and we started there with buying participations. But over the last 10 years or so, cultivating our commercial real estate department. So all of that to say that I think we have a great brand and reputation and tools to drive mortgages, auto loans, and commercial business loans, at least on the commercial real estate side. And now we're focused on building that same reputation and brand out for credit cards. So it's quite a lift
Yeah.
Sure.
to get that done. And we have several initiatives to help do that. But
Okay.
I would give us a kind of a C in terms of having a credit card program that's ready. But I
Hmm.
definitely think that we are building some momentum based on our double digit growth over the last couple of years. I think we will get our Cards 2.0 strategy executed in the next 12 months or so. From there, I think we'll be able to scale. So there's a lot of work going into building that.
As a follow up on that, can I ask what percentage of your members hold an Orange County's credit union card now?
If I'm looking by gross active accounts, we're running about 7.5, 6%, 8%.
Okay.
And if I count it by number of total cards, about 14%.
Okay. And is there a percentage of the credit union's interest income that credit cards are bringing in?
It's bringing in about 3 to 4% top line
Okay.
income, but I would give more credit to the bottom line income
Yeah.
because
Yeah.
definitely on the top line, we have a large mortgage presence, we have commercial loans, and all of those can kind of drown out credit cards. But what I like to say is that the credit card portfolio income can represent 20% of our bottom line. If we
Hmm.
can get top of wallet strategies into place, if we can drive that interchange revenue and the interest revenue, as well
Hmm.
as the digital strategy, I think that that's the opportunity that we are striving towards.
Sure.
Okay.
And Jeff, just going back to something you mentioned a couple times, this program, the Cards 2.0 program that you mentioned, can you explain what that is and like kind of how does that work and what's the background on that?
So, CARS 2.0 is what we call, on one side, when you look at what members are looking for from a credit union, from their financial institution, from their card program, first of all, they want to have a safe and secure product.
Sure.
And so, on one side of that, with the amount of fraud that we're having and the amount of risk that members want to put their trust in us and make sure that they have a secure product, we have several security projects in the works. So we have, for example, card alerts, getting that digitized and making sure that our members can help us to fight fraud by when they see a fraudulent transaction, they can dispute that transaction.
Mhm.
They can turn their card off and on. They can submit travel notifications and do different things to control their card. So that's the card controls side of the equation. Implementing tools like 3D Secure, 3D OTP. If we have a member that's purchasing a transaction with a card not present transaction, we would be able to send a code to confirm that it's them. And then they can say, yes, that's me, no problem, and they can move on with their transaction. On the experience side of things, activating their cards, we've had some challenges with card activation, not having a really good digital way to do that. So
Mm.
members would have to call into our call center to activate their card if they were having problems with the audio system. And
Okay.
so making that a much easier process. And then also from the member engagement side, issuing contactless cards so that members can tap and pay, having a digital card issuance strategy so that members can start using their card before they actually get the plastic.
Hmm.
We have a rewards component in there, building out our rewards program
Mhm.
to make it much easier for our members to be able to engage in their rewards. Right now, it's a little bit difficult to find the rewards. And so, remapping and making those easier to touch. Text messaging,
Mm.
getting the card in their wallet, all kind of things. That's what we're calling Cards 2.0. Everything that, from my perspective, will modernize our
Sure.
card strategy. Many other credit unions and companies already have these tools. For us, just to get to a level playing field, we would execute Cards 2.0 and then from there, Cards 3.0.
Sounds good. Yeah, and that was actually something I wanted to ask a little later on was, what are some of the members' needs specifically with credit cards and how you're meeting that? And that sounds like that's kind of exactly what you're doing with this program. So, and I think the fraud piece especially is critical these days with so much going on in that area.
Hmm.
But yeah, I want to ask another question, kind of a big picture question just about competition and marketing with your credit cards. Personally, when I've opened one recently in the last few years, it's because I'll see like a big welcome offer, like get 40,000 points, and then that'll equal like a week of free hotel stays if you spend X amount in the first 3 months, and that to me is like, "Whoa, okay, that's really appealing. I'm gonna go for that and it'll pay for my vacation." So, and you see those out there, it's usually like a B of A or a Chase card that it's through. So, when you look kind of just at the whole landscape of credit cards overall, seeing that there are offers like that out there, how can a credit union make their credit card look appealing if that's the competition that's out there?
There are a lot of different strategies, and the way that I look at it, it depends on who you're targeting and what your strategy is and what your priority is around credit cards. I know some credit unions that have a top credit card focus. We are one credit union that's building our ability to compete out there. I think the first way that I would answer your question, if you have a top of wallet credit card strategy with a strong rewards program and all the engagement tools, you have travel rewards and all the different perks that go with that program. In a lot of ways, you might be able to afford to give some of those types of perks,
Mhm.
whether it be reward points, or a $200 reward opportunity, acquisition fees, things of that nature. I think one of the things that we found is a lot of our members, if you look at our different profiles, we have, for example, everyday members that are just family union members
Hmm.
that are middle income, middle aged families with kids. That's our biggest percentage of members. And those members, in my opinion, they just want a card program that has a low rate,
Mhm.
that has some type of rewards, whether it be cash back.
Hmm.
They're not looking for anything fancy.
Right.
And so serving those members well and coming up with strategies to really drive that side of the business, you won't have to put out a 250,000 points strategy.
Sure.
But then if you want to be top of wallet, which is one of our goals, we want to come out with an elite card in the long run.
Hmm.
As we build our program and kind of working with our issuer, we're with MasterCard, for example,
Hmm.
we can come up with strategies and approaches that will help to drive those types of products and programs as well. And I'll give you an example today. We're trying to be creative. We just got approved to offer a drawing for a Tesla,
Oh,
right?
nice.
Oh.
So we're putting together a strategy around how we're going to leverage that sweepstakes, right? That
Yeah,
sweepstakes will help get cars into
Hmm.
digital wallet. It'll help us with our reissuance of our cards when we convert to contactless cards. An incentive to be part of the drawing if you activate your card within a
Yeah.
sure.
certain amount of time. Those kind of incentives. So there's
Mm,
different ways that we can compete. I
yeah.
think what's important is that you know your members, you know what strategy you're after, and then you build strategies to drive that particular opportunity.
Jeff, you were talking about challenges of credit card adoption earlier. What do you think are the keys to growing credit card adoption and use among your members?
I think number one, the challenge might be twofold. Number one, in the past, you were more hunting for members and trying to get them to use your product, where today, with a lot of the economic environment, the increased rates, the inflation that we're going through right now, there's increased demand even for credit cards today. So you kind of need two things. I think that in order to attract cards, the most important thing is that you have a presence in your digital strategy.
Mhm.
We have a
Hmm.
lot of focus on the digital experience as one of our key pillars for our strategic plan is digital experience and engaging in members in embedded digital experiences. And so having your card propositions show up there for beginning, for starters, right?
Mhm.
Being able to let a member know that they are pre-approved for a credit card and that there's an easy way for them to click and accept that card. We've had great success in the last year working with one of our fintech partners who was able to make it easier to apply for credit cards.
Mm.
The way that that works is, for example, in the old days, we would have a member go to our website and they would fill out an application and we would let them know if they qualify for a loan. Well, today, our member can go on our app and they just have to put in their phone number and some key information. And at the click of a button, we already have them pre qualified, pre approved for a credit card offer. They can see what the rate is, they can see what the terms are, they can see what the value proposition is in 90 seconds. Where in the old days, they would have to get approved, then call. We would go through a round of phone tag. And then once we get them on the phone, we can talk through the options, the value proposition, and why our card. But in this new experience, they're not only seeing our credit card offer, but they're seeing an auto loan transfer option. They're seeing a personal loan option. And I would say that probably the quantitative proof that this is more effective is when we rolled out this new experience, our credit card applications increased by 245%. And so the amount
Mm.
of increase in our applications just by being at the right place at the right time where the member lives in that digital experience is definitely one of the key components of a growth strategy. And then the other is working with fintech partners or different partners that drive demand. And so we're looking at a couple of partners. If you go into your Credit Karma app, you see all these offers from SoFi and Citibank and American Express and all the top card issuers, all the top personal loan issuers. That's where the young people are seeing the value proposition. So partnering with those partners so that you can have your card offer out there so
Sure.
that they can see Orange County's credit union in that app and then they can click through there. So I think that it's just being creative and working with your partners to be at the right place at the right time is what's going to really drive your growth in that.
Of course.
Sure, absolutely. What about this is just one thing you didn't mention that I always kind of equate with credit union credit card marketing, and that's balance transfers. Is what role do balance transfer marketing and offers play in your credit card adoption? Or is these other things you've talked about much more effective that you're not even focusing on that?
In terms of balance transfers, for us in particular, we have two strategies. We want to drive engagement with transactors who pay down their balances every month.
Mm,
And then we also want to help members that might have accumulated credit card debt to get a better rate on that debt so that they could pay it off sooner. So on the balance transfer side, we are putting together a campaign that's about to roll out in a week or so.
Hmm.
And the value proposition there, even with the 0% for 12 months or 18 months, we're also offering a balance transfer after that, having a lower rate so that they could pay that debt off sooner. I think the key to balance transfer today is doing it in a way that you are attracting business that's not going to default, next month. So having the credit quality tools around that strategy to make sure that you're helping members but not hurting the membership. That's a long way of saying that we definitely have balance transfer as a part of our strategy.
I want to ask a couple of data questions for you, Jeff. Does your credit union use data slash business intelligence to determine what members' needs are in terms of credit cards?
We have quite a bit of data, and the way that I would explain it is some of it is mature and some of it we're building it while we're flying it.
Oh, okay.
So, for example, years ago, I think maybe 2017, 2018, we started really trying to figure out how to develop a feedback loop so that we could get great insight to what was happening with our members through the eyes of our associates, through the eyes of our branches, as well as directly from them. So we put together several strategies around feedback. Of course, everybody's familiar with the NPS scores and surveying members. On top of that, listening sessions with our branches, with our associates, and then having a system where they can enter feedback that would give us insights to what members were saying and what's happening. And then what's important about all that feedback is bringing it into some kind of alignment. So, what do you do with the feedback? How do you prioritize it? And then what action do you take on that feedback? And so that feedback loop was critical to us building part of our CARS 2.0 strategy. Just through over the years, through that feedback, we learned that there was pain and friction around fraud alerts, members receiving a text, but they didn't know that it was us or if it was us. And so they didn't answer it. And because they didn't answer it, then, we block their card until they call us back. So pain points around fraud alerts, block and reissue process. The disputes process was a pain. We had a lot of wet signatures and PDF forms back then, a lot of different processes for card controls, didn't really have a real time transaction access on our credit cards. And so all of that feedback is what has led us to CARS 2.0 and developing strategies to improve that experience. And I would say that since then, we don't hear much in the feedback loop about pain points to our credit cards. It's just mostly recommendations. And then from there, partnering with Experian or other data sources to put together member profiles
Mm.
around our data so that we know who our members are, what are the clusters of those members, and what are their needs. If we're thinking about designing products and programs based on the member's perspective, then you need to know what the member's perspective is, and data will inform that. So, surveys, the mosaic data profiles to give us financial profiles of those members. And then more recently, where we've been focusing on what we call Analytics 2.0, and that's been in the works for a few years, modernizing our databases so that they can be leveraged with artificial intelligence, with data strategies, predictive strategies, and so on. And so we have just finished a kind of a first draft of our credit card dashboards so that we gain insights into the car utilization strategies, how members are utilizing those cars, and which categories are less used versus more used. We put together engagement strategies where we can understand what's happening with our members by income. I think the future vision of that is behavioral changes. Are members disconnecting or are they connecting? Are they canceling their automatic payments or are they adding them? This will help us to be proactive in keeping our growth strong. And then, of course, you have the analysis side of things where we're always looking at spend by spend transactions, activation rates. And then we have a fraud dashboard focused on fraud trends to help fight the good fight of fraud as well.
Well, thanks for going into all that.
Yeah.
That was nice and detailed. I appreciate
Yeah,
it.
sounds very comprehensive. It's awesome. Okay, so Jeff, now you touched a little earlier on, you mentioned that the demand for credit cards has grown recently. So to go along with that, I wanted to ask just overall, how has, inflation been affecting most of us? And also the high cost of living, especially where you're located in Southern California, known to be a pretty high cost area. How has that been impacting your members' finances overall? Are you seeing higher credit card balances, even on other loans? Are you seeing like more delinquencies? How is it kind of affecting them overall? And then what are you doing to address that, if anything?
The short answer is yes, yes, yes. We're seeing more demand for credit cards, more demand for personal loans, more demand for refinances to try to help reposition debt. We're seeing members default on credit cards at a higher rate than in the past. Because of that, we have some dashboards really focused around monitoring credit risk. On the credit card credit risk side of things, one component for us is that we have not gotten too aggressive in our credit card lending. So we're not seeing too bad of a turnaround in terms of risk, just because we were starting out to grow our credit card portfolio and doing a little bit deeper lending. And so overall, we're seeing a pretty steady portfolio in terms of average credit score, but we are seeing the utilization go up. So when you look at our weighted average utilization of credit cards over the last year, it's up about 7%. So we were running 67% a year ago, and now it's up to 72%. That translates into a probability of default ratio of increase of 25%. And so that increase of 25% is what we're seeing come through our charge offs. And those have been planned for when we were working on our allowance for loan loss. And we're still under those projected numbers. So everything's manageable, but definitely seeing some pain out there.
Yeah.
What we're trying to do is we have a strategy that we partner with our loan servicing and collections team where number one, being proactive, we've purchased some student loan data to help us to understand who was behind the return of payments and who might be at risk for default. So we partnered with our loan servicing team to make sure we had some early intervention programs around that. And then we also look for opportunities to refinance those loans. Maybe they can convert that credit card debt to one of their auto loans that's paid off. We've seen a lot of success there where a member didn't realize that they could refinance their auto loan and have a much lower payment to let that credit card debt go.
Very good. Last big question in this segment of the show, Jeff. The Credit Card Competition Act, which was introduced in the Senate last year, would require large credit union issuers over 100 billion in assets to process credit card transactions on at least two networks, with at least one of them not being Visa or MasterCard. The credit union industry, America's credit unions, all of them, they've been sharply opposed to this legislation, saying it would harm credit unions. What are your thoughts on it?
I definitely agree. I think that there are definitely some headwinds if we have government intervention with credit cards. Number one, I think that there may not be enough of an understanding of how these interchange fees pay for a lot of the tools that are used. For example, when I first went into credit cards, we didn't nearly have the amount of fraud that we have today due to technology. And so having this revenue helps us to not only offer credit cards without an annual fee, but to also build these fraud tools that will help us to keep credit cards safe for members so that they can use them in confidence. It helps us to keep them away from payday lenders. I agree with all those points that have come up in the responses. The other side of the equation is if you look at what we saw with the Credit Card Act when that came out in 2009, the savings does not translate to lower prices. And so thinking that we're going to make everything cheaper for everyone at the merchant side is the answer. We found through data that that's definitely not the case. Making sure that we prioritize and let businesses run these programs to keep banking safe, to keep credit cards safe. I agree with America's credit unions that it will negatively impact consumers as opposed to help them.
All right.
Great.
Well, fingers crossed that that legislation dies this year sometime. We'll be watching it for sure. Okay, Jeff. So now let's move on to part two of the interview. And this is the fun part because it is all about you. So, first, I have a couple of Orange County location based questions. It's funny because we recorded an episode yesterday and our guest was from Wisconsin, and we had Michael come up with some Wisconsin themed questions because he lives in Wisconsin as well. Well, I actually live in Southern California myself, so I was tasked with coming up with some location based questions. So, first, so you're in Santa Ana?
I work in La Habra, which is about 22 miles north of here, but I work in Santa Ana.
Okay, cool. So, first question. If you were forced to binge watch all seasons of one of the following shows this weekend, which one would you go with? The OC, Laguna Beach, The Real Housewives of Orange County, Selling the OC, Dead to Me, or Arrested Development?
Well, this was a fun one because one of my favorite things to do, we have such crazy jobs,
Yeah,
where we have to use our brains and everything that goes with that.
sure.
And so one of my favorite mindless things to do is to binge watch reality TV.
Oh,
And
Oh,
it just
wow.
so happens that Selling the OC is one of my favorite shows.
really? Okay, all right.
So I just love all the home shows about selling expensive real estate
Yeah,
just because I grew up in the LA area. So I'm very familiar with Beverly Hills and everything that goes on in that area. And
yeah.
selling the OC, just seeing those beautiful properties and seeing the dynamics of the Oppenheim group, I just love it. And then on top of that, I'm always looking for outfit opportunities. So trying to figure
Oh,
out who's wearing what so that I can up my game in my weekend outfits.
I love this
I
reveal.
love this too.
This is
Yeah, I
great.
was I was afraid that you were gonna be like, "Why are you asking me?" But these shows are just the cheesiest, dumbest. Okay.
I
Love it.
love it.
Okay.
Okay, next question. Let's pretend I'm your nephew. Okay, Jeff. So, your favorite nephew is coming to town to visit his most beloved Uncle Jeff, visiting Orange County for the first time. Where are you taking me?
Oh my gosh. Well, everybody wants to go to Disneyland first or Universal City Walk or maybe even to go see the Hollywood sign. So just because those are my stomping grounds, I know everywhere up and down Sunset to go for fun. We always kind of get those out of the way. Some of my other favorite things to do is to drive them around to show them my old neighborhoods
Oh,
where
yeah.
me and my brothers grew up. So I'll show them where their dad used to live and kind of drive around those spots. And we have kind of two approaches to that. The one side of that journey is driving in some of the more rural areas where we used to live. We grew up in West Covina at a time. And if you know West Covina, it's a little bit more inland from LA. And so we moved there before they even had, a lot of the popular stores like 7-Eleven and different things. We lived across the street from a strawberry field that's now filled with apartment buildings.
Hmm.
The other side of the equation is taking them to Sunset and Hollywood and showing them where some of the hot spots are that we used to do things out there,
Yeah.
dance or sing or do
Oh,
different entertainment things. And
yeah.
then take them to my favorite restaurants. I love the restaurants up in Brea. So
Hmm.
going to Bruno's Italian Kitchen or McAllen Bar, definitely bar for my older nephews,
Yeah.
that is.
Yeah.
Or Union Kitchen is one of my favorites as well. So taking them to my favorite restaurants because me and my wife are both foodies.
Yeah.
Nice.
Well, I appreciate you paying for all of it, Uncle Jeff.
Yeah.
Thank you.
Sounds like he's gonna need a new credit card for after he's done with that. So real quick, you mentioned West Covina. It's funny, and then we were talking about TV shows. There was one TV show that specifically was based in West Covina. It was kind of random, called My Crazy Ex-Girlfriend. I don't know if you guys have heard of that, but anyway,
I
it's just
don't
funny
know
because
that
it's
one.
like out of all places, it is like she moves to West Covina to follow this guy. It's just
Yeah,
funny.
great. I haven't heard of it.
Okay. I actually live in San Bernardino County, so I'm very familiar with everything you were talking about there. All right, let's switch gears a bit here. Jeff, if you could go back to, the very beginning of your career and let's say you had to pursue something totally different outside of financial services completely, what would it be? Was there like a childhood dream that you had, like a different type of career, what you want to be when you grew up outside of what you ended up doing?
Definitely. So before I started working in the industry, I thought I was going to be a vet.
Oh, wow.
I grew up
Oh,
on a ranch, loved
Oh.
working with horses. As a matter of fact, out in Corona, we had a ranch out there, had a lot of access to goats and different animals
hmm.
on our ranch. But when I got into the credit union industry, I also fell in love with music. My best friends, we all had bands. So I would definitely
Wow.
be in the music industry if I did not go down the credit
Oh,
union track. And as a matter of fact, for most of my younger career, I was pursuing the credit union by day and the music business by night. And I had a
nice.
crossroad where I had to decide if I was going to go music or credit union. And I definitely liked making money. So I stayed in the credit union
Sure.
industry, but I would definitely be doing music if that were not the case.
I have to ask, what was your band's name?
We were called the headband.
The Headband? Okay.
And
Pun. I love puns.
and it was kind of the style
Uh,
back then, following Prince and a lot of my other
sure.
favorite artists, they wore headbands and
Yeah.
did kind of fun things with guitars. And so it felt so right at the time.
If you have any photos, I would love to see them. So speaking of that, what was the first album that you can remember ever buying? The first one you ever bought? First one you ever listened to?
Definitely listened to a lot, but the first one that I bought when I had a job, I
Mhm.
bought the Earth, Wind and Fire, That's the Way of the World album.
Oh, I love Earth, Wind, and
I just
Fire.
loved every song on that album. My best friend learned to play bass on that
Oh,
album. I learned to sing on that
wow.
album, and that kind of sparked my interest in music. And so from there, it was just everything Earth, Wind, and Fire, everything that was just
Yeah.
great about the 70s music at the time.
What a horn section. I love that band. What a great band.
Nice. Okay, and Jeff, final question for today. What was the last movie you watched?
So I love movies and I wish I could get out more to see them in the theater, but we do more streaming these days just because logistics. But the last movie I saw was called Past Lives.
Oh,
And
Oh,
yes.
yeah.
That's on my list.
it was amazing. My wife and
Oh,
I loved it so much. It's just really about two childhood friends that end up getting separated from
yeah.
the other friends' family moving from the area, and they remain friends for all these years. And then decades later, all of a sudden, they end up back together, and just the story
Mhm.
evolves
Oh,
into
wow.
just this crazy, beautiful story. And I won't give away since you haven't
Yes.
seen
Yes,
it. I
no.
won't
Yeah,
give it
yeah. It's
away.
no, that's
It was just such a heartfelt kind of moment where someone is so giving and understanding
oh.
based on what the other is going through. So I
Oh,
definitely
wow.
recommend.
Yes, that like, when I heard the premise of it, I was like, "That sounds awesome." Like, I wanna it's like one of those kind of the one that got away type of themes. So, yes, I'm very
Yeah,
excited to watch it hopefully soon.
really great movie.
Yeah. Okay. Well, Jeff Harper, thank you so much for joining us today. This was a lot of fun, both talking shop and then also getting to know you a little bit as well. Really enjoyed it.
Thank you so much, Natasha and
Thank you,
Michael. Appreciate
Jeff.
it.
Yes, thank you.
Thank you.
And for all of our listeners, please subscribe to shared accounts with CU Times anywhere you get your podcasts, Apple, Spotify, Google, wherever. You know how this works. And if you'd like to rate us, we would love your feedback. And for those of you who have questions or comments for us, feel free to email me over at nchillingarian@cutimes.com, or you can email Michael at mogden@cutimes.com.
That's right. Also, this month, exclusively in our executive briefing for subscribers only, we are focused on credit card data and what it shows credit unions about what members want. You can subscribe to our executive briefing at cutimes.com/subscribe. It's a new topic each month. Check it out at cutimes.com/subscribe. Thank you so much to our producer, Zach Nyheisel. Thanks, Zach. Join us again next week for a new episode of Shared Accounts with CU Times. And until then, thanks for listening.